The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
This is episode 29 of the Canadian Mortgage Show. Alex Pang here alongside my co-host Alex Shanks. Alex, how was that Disney cruise and vacation for your family?
It was pretty awesome. I'm going to tell you this thing, Alex. You talked about how expensive it would be to go to Disneyland. Holy shit, is it expensive. Now, I'm going to give a shout out. This girl probably will never hear from this because she's in the US. We met somebody on the cruise that works at Disneyland. She got us in for free, so we didn't have to pay for those passes. Got the jumper passes from Disneyland to California.
Oh my goodness.
We got that for
I was
free,
thinking
and
the
they
same thing.
like $1,000. But then they have what's called, you can do like a genie pass where you can sign up to get on the rides, but you can only do it every 2 hours. They have this new one that's called a Premier Lightning Pass. You get to go on every ride. And I'm like, you know what? We saved $1,000. We're going to go spend $1,200 so we can get on every single ride really fast. But it's like, man, if someone bought that, you spend $2,200 just to go to Disneyland for a day. Like, it's insane.
Wow. Yeah, and that doesn't include food, right? And you have a family of four. I mean, what? Like hot dog, hamburgers, chicken strips. Family of four, that's like $200 maybe.
I haven't looked at my credit card. I'm scared to do it because it's just the US dollar. Stuff is like 15. Like it's actually not crazy like price. Hey, to get burger and French fries and a drink, it's $15. But $15 US to Canadian is really, really bad.
Oh yeah, that's like $22, $23, right?
I don't want to look at my credit card.
Yeah, every time we've gone to like Disneyland, Disney World a few times, and my family loves it. My wife loves it. I'm just thinking, my goodness, this is a money pit. Like, holy, go to the gift shop, t-shirts and all that. I'm like, oh Lord, this is like a $40 t-shirt. And that's US too. And then I don't want to be the stickler and be the one that's like being the big a-hole, but I'm like, fine. And then I'm like, I don't need to buy anything because I'm like, you guys do. Yeah, exactly. In times of business, I relate to this. I don't tell my wife what I'm making when I do business. Because when I write it on the chart, we all have a whiteboard in our offices, like tracking deals and all that stuff. I used to write it, but she would already spend it before like deals close. So never again. But let me just handle this. And yeah, please do not kill our future.
Totally. Well, and then I know I missed something that we were meant to go together, Alex, how you were at the mortgage summit, right? In Vancouver.
Yeah. So we had, it's the Canadian Mortgage Professional. They held the Canadian Mortgage Summit in Vancouver. Funny enough, I've been in the industry for 15 years. This is actually the first conference I've been to. I've always had this attitude of, well, I mean, I don't need to meet people. Geez, I talk to lenders all the time. I can do that one-on-one anytime. Like, I don't need to do all that. But the fact that it was in my city, it was free, then I have no excuse. So I'm like, okay, let's go. And you were supposed to come, but apparently family had to get in the way, and understood all that stuff. So, but yeah, the panel discussions were pretty good. I mean, to be honest with you, it's stuff that you and I talk about all the time every week anyway. So I did have a hard time paying attention. I was on my phone a lot. So sorry.
The thing is, and this is what other people have to realize, is obviously there's really good mortgage broker, there's really good tax planners, they're really good financial. There's a lot of people in the industry, and this is why me and Alex got together, is we want to share this information. And we're always digging into these things where I talk to other mortgage brokers and you're like, oh, do you know what's going on here? They're like, oh, what do you mean? And you're like, do you read the news? Are you like helping your clients look at anything else other than, that's why, hey, here's a 5-year
I'm
fix.
on Twitter all the time. Other people use Blue Sky, but that's my form of news. And I filter it so that we can talk about it. And just something that I really learned is tech. Now, we all know that AI is slowly coming into the world, into the industries. I learned how it's coming into our industry. There's a story where the founder of, I forget, I think it was Lendesk, mentioned that one of his clients created an AI bot that made outbound calls for him and booked appointments with a mortgage broker. Like, he shared the call and you couldn't tell the difference. It was as if you hired an assistant to make calls, to make appointments. And they did that. So this AI made 5,000 calls, ended up leaving 20% of it voicemails and 5% booked appointments. There's another instance where they loaded an email chat thread or email thread or a recorded phone call into AI, and it essentially populated an application for you. So we're all like, "Oh, this is cool," but I think I'm more hesitant behind it because growing up watching Terminator movies and hearing about Skynet, War of the Worlds, like, you know what's going to eventually happen? They're going to take over and they're going to deem human beings as inefficient, flawed. So what's the real answer? Get rid of human beings. So I'm scared.
It's AI's there. It's something that's going to better stuff. It's a tool that's going to be used, but it's not going to take away like our roles. It could take away a large portion of people that aren't doing stuff like this, extra things. An AI is not there to show compassion. It's not going to be able to talk someone off the ledge of, oh my God, you didn't get the down payment or your financing's not going through. That's what really matters in this industry. I was talking to someone today. Their bank isn't calling them. They were told they could remove financing. They then sent an email and said, hey, there was an error. The bank won't answer their phone call. I had to pick up the phone because a friend referred them to me. And that was 4 hours of my day, just helping them be like, hey, you have options.
And another
AI can't do that.
Colleague in a different industry was mentioning about AI is great. Like you can use AI to even build you a website. The only problem with it, AI doesn't care about cybersecurity. They don't care about like these, whatever, how secure your website is and all that stuff. So yes, we use it as a tool. And you know what? We admit too, when we started the pod, we had no idea what to name it. And I actually used ChatGPT and it spit out a good list of names and we decided on the Canadian Mortgage Show from AI, from ChatGPT. So you got to give it some credibility there.
Yeah, you're just doing that because you don't want you're not going to get taken over first.
Man,
that's
we
all
have
you're
a
trying to do there.
jam-packed show. You just being away for 2 weeks. Man, so many things have happened. We got to get right into this.
I actually made my first video today, and we'll talk about what I made the video on later on here. I had made a video in 2.5 weeks. It was actually hard to do it again. I'm like, but it was like this news, I got to get it out there. Same with all the tariffs that we're going to talk about. Just so much stuff happened in the last 2 weeks. And all this data is going to be a little bit old. So Alex and I are just going to give like the really important stuff here.
It's basically each day is we're going to have tariffs. Next day, oh, we're not. The next day, oh, Doug Ford's going to threaten 25% surcharge for electricity for the US states. And then Trump jumps back with, I'm going to increase steel and aluminum tariffs by 50%. And then this playing chicken game where then Doug Ford backs off. And then Trump backs off. And then now, our tariffs got delayed till April the 2nd. So it got delayed more. And then all the other provinces, sorry, I'm just verbal diarrhea, but all the other provinces have taken alcohol off the shelves. And we talked about that. And thankfully, there's some US wine that we like from California. My wife and I stocked up before. And that pretty much sums it up in the last couple of weeks.
Yeah, I would say so. And I was in the US here firsthand. And I tell you this, I think depending on where people are in the US, there was nothing weird going on there. People weren't attacking Canadians. Canadians weren't attacking the Americans and everything. We had a couple conversations with people and they're in the same spot as us. It's just uncertainty. They don't know what's happening. We don't know what's fully happening.
Even when I
every day
went down to
right
a few
now.
times to pick up some items, I even had a chat with some of the Blaine folks. Like, how's the business going on for you guys? Has it really slowed? They're like, yeah, absolutely. And I said straight up, we don't dislike you. Like, we do business with you. We're all regular people. We're not like it's just what's happening with our governments that they're just fighting. And yeah, we're all just hoping that we've been allies and friends and neighbors for like hundreds of years. Like, why fight now? So it's just what's going on is just a shame, and it's affecting our economy because of it.
Yeah, but we're Canadian, Canada. We can't say that. Oh, we don't do it. We do this to China and everything. Like, people have to remember, the U.S. isn't the only bad person here. Canada's been doing it to China. We have 100% surcharge tariffs on their EV vehicles. Wouldn't you love to be able to buy an EV vehicle for $30,000?
I've seen some videos coming up through TikTok about this China E's. I believe one of the big ones is BYD. And they're showcasing a $60,000 that was, just imagine yourself in almost like first class, where your seat rolls back and you can sleep. And then the screen in the back rolls down like the airplane. It's like like a 20-inch screen where you can kind of air gesture by moving the icons around and everything. And it had a range of, it's in miles, but the range was 880 miles, which I don't know my conversion correctly. That's 1,100 kilometers or something like that. Over 1,000 kilometers at least. Yeah.
Yeah, that's insane.
Exactly. I'm like,
we're at
dang, why can't we like, and then my wife told me she follows US politics a lot. She said the reason why we did 100% EVs on Chinese EV was the US asked us to. So, well, guess what? We're in fight with US now. So we don't need to keep up this agreement. Europe has a Chinese and there is some tariffs in Europe, but I think a lot smaller, like 10 or 15%. Not enough, but China EVs all over Europe.
And that's where China's now pushed back on us and they're charging tariffs on us. And the industry I used to be in 15 years ago as a commercial diver for seafood, it's getting hit now because of that. Because the seafood industry that sends most of its stuff to China, and even if their other products have been going to the US, and now those are tariffs.
And then
so
something
it's sad
that
to
China's
see that.
also doing is in retaliation of our 100% tariff on their EVs is they're applying 100% tariff on our canola oil, which I didn't know was a thing until like we shipped our canola oil off and
Alberta's quite a bit. Like there's a lot of canola oil.
well, yeah, we didn't want to take up too much of the episode on tariff talk because it really changes day by day, week by week. But you know what? What's been dominating the news lately is stuff that's been happening in Canada. So we have Mark Carney. He's the new prime minister or the new Liberal leader. It was a 85% vote within the Liberal leadership. If you ask me, it was probably rigged. They wanted Carney anyway, so he's the new prime minister.
It was going to happen. Now, I know we talked about it. He was never elected to office, like he never had riding or anything. Now, the one thing I did learn,
Danielle Smith.
the Alberta's
Danielle Smith.
Premier, what's her name again? Same thing. I didn't realize the same thing happened to her. She didn't have a riding and she was elected too. And it's weird. I know the conversations the last few days that Mark Carney's been having haven't been looking great for him, talking about he had to set up a blind trust for his investments. Because for everyone to know, Mark Carney is very rich.
Yeah.
He has a lot of money, he's done a lot of investing, and he has been in a lot of infrastructure deals that have benefited from him with what the government has done. And so he was meant to set everything into a blind trust so he doesn't know where it is. But the person asked him, they're like, you just did that. You knew where your investments were before, so tell us where your investments are. And he couldn't even answer. It wasn't
what's
good.
The word? It's a political word where you don't need to know, so it's so you're not involved kind of thing. Something's there, but it's But yeah, geez, like same thing with him with when they moved Brooksfield to the US and he denied that he knew about it, but he was still chair when they voted it and he denied that. It's all politics and stuff. But what do you want to mention about this breaking news that Carney mentioned today?
News I mentioned he did it first. The Liberals are the ones that talked about it. He's going to be removing the GST on new builds for first-time home buyers if it's under $1 million. Now, I'm going to tell you this first here, people. He was not the first person to talk about it. Pierre talked about it, the Conservatives, months ago. They even had a vote on it, and the Liberals voted it down. The great thing for us as citizens is, hey, it's going to happen. It definitely is going to happen. This cannot come into play unless he stays in power.
It seems like Carney has taken the playbook from Pierre and the Conservatives and just because they've been down so deep in the polls, we're just going to take what they're doing. And was another thing that Mark Carney has taken is, the no more carbon tax, no more consumer carbon tax. And in exchange, though, like they're getting rid of consumer carbon tax. But what they didn't mention was he's raising the industrial carbon tax. So it's going to be really just shuffling the deck chairs and you're just charging more from the industrial, like the business side, which in turn will be passed on to consumers anyway.
And again, that can't, like he's talked about it, it's a thing that he wants done. Like, unless he is actually, it goes through Parliament, which Parliament is not running. He could have got voted in. He could have restarted Parliament instantly. He could have started a snap election. Obviously he didn't. For them, it's a chess game. They're trying to figure out what's going to be the best option. He says it's coming here soon.
Well, you know what? We're jumping all over the place. I'm jumping ahead from but speaking of Carney, he's set to call an election as early as Sunday. I guess because Liberals have closed the gap on the Conservatives in the polls. Who knows if the polls are actually true? And the election could be April 29th or May the 5th. We wanted it, folks. We wanted an election for the longest time. So maybe Mark Carney thinks that, hey, maybe the Liberals had a chance to get reelected again. I'm not so sure, but it's time.
I don't think the stuff that gets online is they're polling much better.
It seems
than
like they're almost neck and neck.
Again,
like
the poll,
like some polls shows that Liberals are ahead. Other polls are like Conservatives are still ahead. Who knows? The same could be said when even in the U.S. election, showing that Kamala had a chance to beat Trump, and guess what ended up happening? Trump won in a landslide. So we'll see. But
I'll go back to that GST thing here because I do know now these are my questions on it. And this is where I tell you this, I had 3 people that closed new builds today. So this news is I had to jump on it with them right away saying, hey, like we don't know when this is coming into effect. This could be coming in 2 months. This could be coming in 6 months. This all has to go through Parliament. Now, the issue I have with this
that's
is,
the question.
is there going to be any retroactive? I could say in it, I don't know if there is. That's going to be a lawyer's question to figure out, is there going to be retroactive? Now, we also don't know what's the Canadian definition of first-time homebuyer changes. It's so hard for me to understand what the government specifies as a first-time homebuyer. For most things, it's someone that's not owned a home for 4 years. That is what a first-time homebuyer is. That's how you can use the first home savings account, your RSP. And I could see it being a good thing, but if it becomes like the land transfer tax, that means you have to never own a home at all. Now, it's just there's questions that need to be answered. The savings, there's savings, like it is going to be a nice thing. Now, where we know, Alex, and we've talked about before, it's the development charges that are getting hammered on by the developers from the government. That's really where a lot of these costs are going in. Now, are the developers going to charge less? I don't know. They might say, hey, you know what? There's no, I might increase my price a little bit.
Government needs to play ball. If you want to encourage, we talked about this in probably 10 episodes ago, where Vaughan, Ontario is leading the charge by, hey, we want business. We're going to lower development costs. Business is welcome. And I believe Alberta has been like that the last several years as well. Low development charges, encouraging businesses to build, construction to happen. Now, I guess with BC and Ontario got drunk on all the inflated real estate the last 10, 15 years, and they've upped their development charges. Guess what? It's not helping our affordability. You are part of the problem.
And I mean, the hardest thing, and this is where property taxes in the US are quite a bit higher than they are in Canada. Like most property taxes in the US are $10,000 to $15,000 for an $800,000 house. We know ours is quite a bit lower, and that's where the government get the cities get funding elsewhere. The only other way they can get funding is if they increase property taxes. And I've seen a couple places they're increasing property taxes 10%. That's what the average one I've been seeing is what it's going to be increasing by.
I mean, there's 2 certainties in life, death and taxes. I guess it keeps moving on. Now, we shift gears a little bit here. So we have a banking regulator in Canada. It's called the Office of the Superintendent of Financial Institutions, which is short for OSFI. The chief banking regulator, Peter Rutledge, he's considering replacing the mortgage stress test. So the mortgage stress test up until COVID was 5.25%. But since rates have gone up to 5-6%, it's plus 2% of what you're taking. So the last couple of years, it's been as high as 8-9%. Now it's come back down to the 6 and 7% range. But he is suggesting that they turn it to less of the risk to the borrower and shifting more to the lender as a portfolio. One idea he's floating around is doing a 450% loan to income ratio, where it's a 4.5 times kind of thing. Now, where do you think this is going to end up? We don't know.
This is the problem. They had this when you remember the first home buyer's assistance program in Canada, where they would help you with your down payment. Well, you couldn't go above 4.5 times your income. You can't qualify for much that way, especially does it have a rental suite? So I don't know how well that works. It's obviously the stress test did work. I do believe that. I'm a believer in it. It saved a lot of people and it could have been much worse scenarios without it. But again, for people where we are now, is that increased amount really working, or should we go back to 5.25, 4.75?
It works in a low interest
rate. To me,
we'll
see it more.
It was redundant in a high interest rate environment. When rates were 6%, it's not going to go any higher. It's just being especially punitive. But yeah, we'll see if it does go through and it gets shifted more towards the federal lenders. What lenders will end up doing, they'll just pass it on to the consumers in terms of higher interest rates. We'll see how that plays out. There's a lot of talk right now and all that stuff.
Yeah. And then obviously we got on March 12th there. I don't know if you talked about it if everyone knows, I wasn't on the last podcast there with Alex. He had a nice guest there, but we did have the Bank of Canada rate announcement on March 12th. It dropped by 0.025, which at that point, all the data, there was a bit of time where we didn't think it was going to happen. And then all the data we got was this is how there is no question.
The prime lending rate for banks now is down to 4.95%. Now, they were citing everything that we were expecting. The ongoing tariff war, huge drop in consumer confidence, and even businesses. Even though we don't have tariffs right now, just the threat of it businesses are postponing or even canceling investments. And even hearing businesses are considering laying off staff as a preventative because they can see, like, before it really hits the fan, they want to be prepared for it. And yeah, they're even, we'll talk about it later, but inflation rising and all that stuff, and just timing. There's downward pressures, weaker economy, and the uncertainty with tariffs just forced their hand on from the Bank of Canada. So it was to be expected.
The one thing I would love to go back, and maybe we can use AI to do this, because I know we've talked about this before. How many questions did you get on March 12th that, hey,
yes,
did my fixed rate drop?
I think we've hammered it home so much that I got no question about that, no email.
Amazing. I got 7. And the day before, I had sent the person that messaged me twice about it, that I already had sent them an email the night before saying, hey, if rates drop, remember, the reason why we chose this one, your rate is not going to be changing. Hey, Alex, I see on the news it dropped. The rates are 2.75.
No, that's
is my rate going to go to 2.75?
Borrow from the Bank of Canada. It's not what consumers end up getting. And we keep hammering it home and we're beating a dead horse, but we're going to keep yelling from the top of the mountains until we educate everybody.
It's about the same thing of don't go finance a vehicle. It's so hard. I used to make probably a video a week about it. And everyone would say, like, why do you do it? It's like, because this happens on a monthly basis. I get someone saying, oh, what? That vehicle is going to make it so I can't buy a home. It's like, 100%. Yeah, we talked about
one thing
this.
I did notice is that because variable rates dropped 0.25%, that window where we were contacting old clients who had higher fixed rate mortgages in order for them to save money, it dropped here from 5.5%. Now, even in the 5% range, I'm seeing some savings where I have a client who's still considering it, but her fixed rate is 5.09, as low as that. And she has about 27 months remaining. And just that small difference, I believe it's only like a 0.5 to 0.6% difference. But even there, we're seeing interest. Her savings would be $7,500. So folks, I'm going to keep harping on, if you're in a fixed rate mortgage of 5% or more, now that rates have come down, 5% or more. And I would say probably if you have at least 12 months left in your term before renewal, do consider breaking it. And yes, you got to pay a penalty, but the savings outweighs it. And if you have questions about that, talk to Alex and I. We have this huge spreadsheet. We can do Loom videos and work out all this modeling. I've done that with several of my clients. Alex has done it as well. We're here to save you money and put money back in your pocket. Okay. Following this rate cut,
exactly,
the big banks have updated the forecast here on what's going to happen for this rest of this year. We're looking at this graph. You guys don't see it on your end here, but Scotiabank, I don't know what they're thinking. They see no more rate cuts for this year. I'm like,
they never dropped it before. They stayed at 3% last time across the board, and it dropped. So they're already wrong there.
One, but more if the trade war escalates. Now, the other banks, TD, RBC, CIBC, and National Bank, forecast 2 more. So that brings the key lending rate, again, what the banks borrow from the Bank of Canada, not what we see, brings it down to 2.25. So let's just think that the prime rate could go from 4.95 to 0.5% by the end of the year. Now, this is assuming no more tariffs. If we do have a full year of tariffs, this can go down another 1.5%. Yes. Like based on our thinking, we're probably guessing at least around 0.75 as an average, right? So that's what we're seeing here.
Now, the one thing that we've obviously seen here, Alex, is we did get the inflation report for February, which did increase. It went to 2.6. And this was because we did have the tax holiday. There's price pressures. People were buying stuff because it's the holidays and everything. Now, it's the hardest thing is where we do have 2 imposing forces. We have really shitty economy about to happen. If these tariffs come in, we're going to be in a bad economy, even if these tariffs don't happen. Like, we're in a recession. The problem is if inflation, tariffs is what really is going to drive inflation. And I mean, Bank of Canada is going to be in a weird spot. Like, inflation could rise. Like, I foresee it rising, but I think the bank will still have to cut rates this time. But it means it may not be for very long. They could cut by that 0.5%. By next year, they may have to increase rates because of inflation.
It's basically like the strategy it's a weird spot. I'm telling my clients is take variable now, ride the wave down, and we're expecting fixed rates to be at its lowest probably near the end of the year because they front run the Bank of Canada 3 to 6 months. So let's say the Bank of Canada will be done cutting the rates by the end of the year or early 2026. So if we bring that back 3 months, that will take us probably till October or November-ish. So that kind of forecast still falls in line. So we do see the day like this year where we could see fixed and variable rates in the 3s. We're pretty close there. We're not quite there yet, but we're getting there. Yeah.
Insured mortgages. Yeah. We got some insured mortgages all with a 3 handle. We're talking 0.05% difference to a 4, but it's there. that way and stuff. And so it's again, watching that data. Like we need to see what's happening. It's going to be interesting, obviously, if tariffs come in, like that indicator for inflation is not going to come for months here. Like we're not going to see that data. And so again, I hope the Bank of Canada has learned a little bit of obviously, okay, cut the rates, like definitely do that. But hey, if we see something that, hey, inflation's going to the moon,
yeah,
we gotta.
Our memory is too short. What happened 5 years ago? I'm like, oh, we've been in this. We're like, oh yeah, rates will stay low for a long time. I'm like, I've watched this movie before. I think we've learned our lesson now.
And that's what I tell people is it sucked what happened obviously 4 years ago, but like we have that data now. We have that history. So, hey, if we are taking variable today, we have more indicators to know, hey, you know what? We're not going to let this thing ride as much as we thought because we need to convert to fixed quicker. Where back then, it had never increased that fast. It's, hey, we've gone up 2%, 3%. It never gone up 5% in 1 year. Yeah. That was never, and no one saw it coming. And that's where we have that data now, which is nice for us to be able to
the whole tariff talk. There's one bank that adjusted their risk tolerance. Do you want to talk about that?
And that's we saw it. So BMO, and I've seen BMO's done this before, even like when COVID happened, they adjusted some stuff. And it's just a bank's appetite of how they want to lend. And so BMO, they're going to adjust their risk tolerance for mortgage lending on industry. And this is for business lending too, not only for mortgages, but they're going to affect if you're in an industry that could be affected by tariff wars. And there's a lot of industries that are affected by tariff wars. And so if you are in that, they're going to reduce your TDS, your total debt service, which we can go up to 44%, they're going to drop it down to 42%. Now, if you don't have any debt at all, the max you can only go to is 39%. It wouldn't even affect you, but if you have some debt, it can go a bit higher. And this could affect someone's qualifying if they have some debt, about $40,000. Like it could change your pre-approval amount from say 1,000 down to 540.
Can you explain what actual industries they said that were the vulnerable? Like which ones are we talking about here?
Yeah, it's the one that I saw, like it has construction. It obviously has the import and export. It has car industry.
Yeah.
I'd have to get, I can't remember the sheet. Like I saw it like directly.
Yeah, from I'm pretty sure it's steel and aluminum as well that's affected by the tariffs.
Yeah, I wonder.
All right. So while Alex is looking there, let's move on. We've seen this a lot here that even though we're not technically in recession, our GDP per capita, we are in recession. So this graph here, I'm hoping maybe our producer can throw it up here, is of all the developed nations in the last 10 years, our GDP growth has only been 0.5%. Now, compared to the United States, they're at 20.7%. So which kind of shows we've been relying on just real estate and other things, not actually producing. We're just like money laundering essentially. Yeah. So that's just, and the silver lining of having this tariff war is it shines a light on how inefficient we are with our, like, we are such a resource rich country, but we don't refine it. And we have these interprovincial trade barriers. Like most of the trade is happening north-south with Canada and the States. Nothing east to west. There's no pipelines. I talked about this before. Even something as simple as buying alcohol. It's almost like we're going through prohibition where I have an old friend that was getting married and he wanted to buy alcohol, and to save on the PST, he drove out to Alberta to buy a whole bunch of liquor to save on that one tax. And yeah, of course he had to sneak it through because apparently it's a thing. Like, why do we have this trade barrier? This is why we're in what we're in right now.
It's pretty exactly. That's
no, we didn't do it for ours, but I've heard some people do it and it saved them a lot of money. Yeah, exactly.
That's what I'm saying.
Other things that like our population growth last quarter was only 63,000. This kind of falls in line of us turning off the taps on immigration, which, so I guess it is paying off. We don't have the infrastructure to support population growth, and especially with what's going on and the housing starts and stuff like that.
And that's where hopefully with getting rid of this GST, will that help it? Maybe. Like that. Again, it's a handout to developers to get people to buy properties. Now, what I could see that could be an issue with this is all these people have seen this news about GST. They're now not going to buy. They're going to wait and find out what's going to happen with this, which could slow the market down, which already could be happening with the tariffs. The problem I see with that is it slows it down. we then could go into a goddamn spree if that happens and rates are lower and people are able to buy, is everyone's then going to go try and buy all these new builds, and we're just going to go into a multiple offer, prices increasing. It's like, this is not the greatest idea in a sense if people are going to be holding up all to try and buy at the same time.
You mentioned that too. Reaching out to one of my clients, and they were looking for the longest time. She said the same thing. Because of the whole tariff uncertainty, they're holding off on the purchasing. And I replied, I understand the sentiment. This is why you should go buy. Because the whole saying of you buy when no one else wants to buy. Because there are deals to be had. More so with the condos because it's a glut in the market. Less so on maybe the townhouses, and certainly not detached. It's holding pretty steady. But the fact is the sentiment is at its poorest, as we remember. There's a graph here I'm going to get our producer to throw up to, an index of the consumer confidence. If you can imagine this index, like we are at the lowest of the last 25 years on how
I bought that second low. I bought it the 2023 one there. That's when I bought a recent house, and it was like, it just worked for my family. I ran my numbers, rates were higher, everything worked.
Yeah,
I could sell that thing for a lot more money now because of when I bought it. And that's where knowing your numbers,
it is the Warren Buffett even thing if it's where you be greedy when other people aren't. Like, it's do the exact opposite of what other people are doing. And if you follow the herd mentality, you'll get exactly what they're getting. So yes, it goes against our moral compass and maybe our human psyche. We're like, you're buying and everyone's telling you don't, but that's actually how you get ahead. That's the same thing that goes, and obviously not in the markets, but that's the same thing right now. The markets aren't doing very well, but everything is on discount because they'll eventually come back up. So this is a buying opportunity if you are in the means to do it with real estate, with the markets and all that stuff.
And so the one that we wanted to talk about obviously here as well is we already talked about there could be an election coming up here between April 29th or May 5th. This is a big one. Hudson Bay, the Canadian department store chain, we know founded in 1670. It already had filed bankruptcy like a while ago. It's been going through receivership, but like it's done now. Like I think it's over. That company is gone.
Premise of the big box department store is it's not keeping up. I think ever since Amazons and the eBays and online shopping has come into play, those days were numbered. It was almost like us growing up seeing Blockbuster. You know, like you and I growing up, we're like, oh yeah, Friday night getting a movie. I'm older than you, but you remember the days. Friday night, the new videos.
Oh, it was my favorite thing.
Like the VHS tapes. And if they're not there, you check the return pile because possibly you might get one. And same thing with BlackBerry. They were resting on their laurels that they were the big dog and they did not adapt to changing environment. That's happened with Sears, remember Eaton's, Woodward's, and Hudson Bay. Like I go to my closest bay in Surrey and my goodness, they are poorly run. I can get no help from anything. And none of the stuff is like the nicest up-to-date fashion. I would think it's all what my parents would buy. So it's almost like their days were numbered and you feel like this could end for them. And it is almost like a slow death and we saw it coming.
Yeah. That's again, there's going to be a lot of people that do lose jobs from that and everything. And it's a sad thing. Like that company was founded in 1670. That's a crazy thing to see. But like you said, they didn't move with the times. They didn't try and adjust. They're obviously the shareholders, the people running the company, they were just sucking everything they could from it. They're just like, I'm just making money from this. I don't care.
I got to put my hand up. I had a BlackBerry in the early 2000s. I loved it because it was amazing. It was buttons and then like back in the day where we had like the Motorola Sliver or StarTech or what was this? Not the Sliver, but Razor. Yeah. And where we text, there's 3 letters per number. Yeah, so you have to press to get to an E. You got to press number 3 times and texting like that. And then when BlackBerry came in, it was like a keyboard, and it was crazy. It was amazing, and yeah, they dominated the indry. BlackBerry, they had the BlackBerry Curve, BlackBerry. Oh yeah, it was a BBM, BlackBerry Messenger. So like their main thing was security. I mean, I guess this was before smartphones where they were really good with emails and securities. And once Apple came, they were fluffing it off as a toy. But when Apple came in with a touch screen, you have a big screen and then promoted more of the web browser stuff. And then BlackBerry couldn't keep up and they just didn't adapt. And then by the time they tried to adapt, it was too late already. And I believe, there's a movie, a documentary called BlackBerry, I believe. You should watch it if you haven't seen it. It's a pretty good one. But yeah, another company, not as old as Hudson Bay in our industry, Rocket Mortgage Canada. They're the biggest mortgage provider or lender in the US. They came into Canada probably
No,
what,
so
2022,
just
I believe.
not.
Yeah.
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 The
They
hard
called
thing
it
is
quit.
they came in at the
They just
worst
couldn't.
time. And it's a hard market. Like for one, the way that financing is done in Canada is completely different than the US. Like the way where lenders get their money from. For one, we have banks, financial institutions. They get to lend on what's called a book ledger. You could go in, Alex, and say, "Hey, I want to borrow 500,000. Maybe you got a lot of investments. You don't have anything else." They'll say, "Yeah, I'll give you that money." Where a monoline lender, what Rocket Mortgage was lending on, they have to go by different guidance. They have to go by what the government is saying, what their investors are saying. And it's hard for them to get funds. And it's just, I don't think they were prepared for like how different it was here in Canada, which I don't know if they didn't do that much research, but it's a lot easier to get financing in the US.
It goes to show
it's a
like
lot harder in Canada.
The big six banks really have an oligopoly, and it's not just easy. But there's companies before that tried to come in. Remember Kevin O'Leary? He had this O'Leary Mortgages at one time. This is probably about 10 years ago now, where he only offered fixed rate mortgages. And I don't think O'Leary Mortgages operated in the broker space, but I think they were done with like less than a year. And the same thing, Quest Trade, they offer mortgages too. And I think they've halted that one. Yeah.
Well, yeah, they did. We get that in the industry. You get that. We have a lot of companies that I see them come up. I got the best, the most streamlined process, 24-hour, 1 hour pre-approvals. Everyone, a pre-approval is quite easy if you give the person all your documents. They're trying to sell a fairy tale of, hey, I can do this for you in an hour. Guess what? You can go to a calculator, type in your income, and you could say that's what they did. If someone is not looking at your documents, looking at your entire
one
picture,
thing about Rocket,
it means
I sat down with their business development manager, and I was even asking them, like, since Rocket is such a big lender in the States, is there not that possibility of providing funds from the US side versus like in Canada? I'm like, I guess he gave me a complicated answer where there's a lot of legalities behind it, where you can't like borrow from big mom and dad over their side to fund the little kids.
Also, rates in the US are quite a bit higher than they are in Canada as well. And that's where it's funny. I mean, if you call everyone right now, hey, do you want to take a 6% interest rate for the next 30 years? You would say no. That everyone would want a Canadian mortgage. Obviously, when we went back to COVID, when people in the US have 2.5%, everyone was screaming, I want my fixed rate to be for 25 years, 30 years. That's not the case now. The US mortgages on average are at 6%. Yeah. We're at average 4.5%. And that's where Canadian mortgages have always usually been lower than the US.
Go with 5-year terms. In the last couple of years, we only went with 3-year terms. And then every 5 years, we renegotiate because the market changes. Whereas in the States, the way their rules is like, there's no penalty to break out of the mortgages. But usually there's a lot more upfront costs. So maybe their penalties are built in from the upfront costs. But yeah, it's just a different system. And to change it would just be crazy. Now, Rocket Mortgage, just to finish off this, they didn't say is the threat of tariffs. They did say that they were just going to refocus on the American market, but we're like, yeah, maybe they're just trying to preemptively.
They were all scared. They were going to say, okay, everyone's not using any US companies. Everyone's going to go to Google. Oh, Rocket's from the US. We're not using them, even if they are offering us good stuff. And so I think they were like, you know what? We haven't been doing great. So, let's not even try.
I mean, it's sad. When we lose a lender in our space, that's not always good because we always want competition. And when we lose a lender, I'm sure like say what you want about it, where that lender wasn't great, whatever. But the fact is, if we have less competition, that just consolidates the power essentially. It just promotes the oligopoly narrative, and that's not good. It's a sad day for Rocket Mortgage, and it's not a great day for the broker channel, but we'll survive and we move on and we adapt.
No, I think that's the impact one there. Well, we have pages on pages here, still more on other information. It's stuff that's not like that news needs to be out today. And so we're going to be obviously talking about it here next week.
Yeah, we got so much more.
All the information
we didn't even have to talk about the BC stuff because we have a lot of stuff to talk about BC as well, but we'll save it for next time. Any closing thoughts, Alex?
No, it was great. Happy to be back there, man. And I'll tell you, I don't think I'm going on another vacation for a bit, but I better make sure that
sidetrack, folks. Alex told me he was going on vacation the day before he left, or maybe he gave me like 3 days notice. And I'm like, what the freak? You got to give me notice. I got to find guests to fill this. I'm not going to do this by myself. So please tell me ahead of time, and I will do the same for you. Folks, thanks for listening. We just want to give you props for those of you listening. And there's some people, when I was at the Canadian Mortgage Summit, they even mentioned that they listened to us. And some of the brokers there, I said, hey, listen to our show. And then there's one lady from my office listened to our episode. It's like, great job. Keep up the work. So folks, thank you for continuing to support us. We're here to bring you the news, to cut through the BS, and just to talk it out, how to best navigate this very complicated market that we're in. And yeah, thank you for coming along with us. So folks, on behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in this episode. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.